Hi there, ladies and gentlemen. George here with another tax video. This time, I'm going to try and explain to you how medical expenses work. So, without any further ado, let's get on with the show. I'll let you know that I'm not an accountant or a lawyer. This is not tax advice. It's rather guidance and perhaps a couple of tips of how you can do your own research, find out the answers. Of course, if there's any doubt that you may have, I highly recommend you consult a CPA. So before I go to the next slide, what I'm going to let you know is that if my video capture gets in the way of the presentation, I'll turn it off. Let's get a pointer. I might need a pointer here. Let's see. Pen laser pointer. Let's see if that works. Bear with me with a moment. Oh, there, look at that. That's a pointer. Great. Let's go to the next slide. And yep, I'm going to turn off my video capture so you can see the whole kit and caboodle. So medical expenses, what are they? It's always best to start from a federal point of view because generally speaking, the Income Tax Act of Canada has primary importance. And then usually the provinces can follow suit and either have a harmonization agreement or even have a couple of credits on their own. But this presentation will mostly focus on the expenses from a federal perspective and let you know that pursuant to subsection 118.2 subparagraph 2 of the Income Tax Act, that's where you can find the primary source of information with respect to medical expenses. Of course, we're not all lawyers, and reading the act can be a bit convoluted. So you can always consult the Canada Services website, and they have a pretty good rundown of all the medical expenses. For example, did you know you can claim an air conditioner? It's eligible, but you need a prescription from a doctor to claim the cost of an air conditioner. Now, I'm going to give you the link to that site, but if you want more detailed information, because I can't possibly, in the short time that I have here on YouTube, to run down all the expenses for you. So I will also provide a link to the Income Tax Folio S1F1C1 entitled Medical Expense Tax Credit. And of course, I'm going to try and summarize everything for you here. All right, let's go on to everything else. Well, before we go on to the next slide, we all have some common knowledge as to what medical expenses can be. It can be prescriptions prescribed by prescription medication prescribed by a doctor. It can be dental treatments, and of course, it's only the portion that's not reimbursed by a private insurance that you can deduct. However, medical insurance premiums paid by you may also be deductible. So, from a Revenue Quebec perspective, they also have a brochure which is well organized. For example, diabetes, you can claim the cost of insulin, infusion pump, an insulin infusion pump, including disposable peripherals used to treat diabetes, or a device designed to enable a person with diabetes to measure blood sugar levels, blood glucose monitor. And this little green P here means that you need a prescription from a doctor to claim it. And that can be found in brochure IN-130-V. V stands for a document that's been translated to English. So they pretty much follow the same rules as the federal government, except there are a couple of exclusions. For example, prescription eyewear. Medical expenses, time period. So you can claim medical expenses from a certain time period. Now, that's why it is important to organize your medical expense receipts according to type and in chronological order. And don't forget, the golden rule here is if it's prescribed by a doctor, chances are that it will be deductible or as a credible. There is a difference between the two, and I'll explain that in no time at all. So it's important to categorize your expenses so you keep prescriptions in chronological order, uh, separately from receipts from eyewear or uh, other receipts, for example, um, physiotherapy. So, again, physiotherapy, I think, should be prescribed by a doctor, but don't quote me on that. Look up the guide to make sure. So, the time period is any 12-month period ending in the taxation year. The taxation year is usually January 1st to December 31st. So, for example, August to August of the previous year, 12 months running uh, into the current tax year, which would be 2025 at the time of the recording, would be eligible. And there's one exception to this. If the taxpayer passed away, then in the year of death, you can go back 24 months, any 24-month period with the last month ending in the taxation year to claim medical expenses. Pretty interesting. I know my logo gets in the way of the presentation, but I don't think there's much information lost there. All right, let's go on to something else. So how do we claim it? So there's two ways that medical expenses can be claimed. Now, all you got to do is enter your medical expenses in your tax software, and the other method, if you're eligible, will be claimable. So the first and foremost way of claiming medical expenses is a non-refundable tax credit. So what does a non-refundable tax credit mean? A non-refundable tax credit, unfortunately, means that it will only serve, the credit will only serve to reduce your taxes to zero. And if it's less than zero, usually there's no refund. Um, End of story. So you can only use non-refundable tax credits to reduce your taxes to zero. Above and beyond that, there might be some carry forwards, for example, donations. So in any particular year that you can't use your donations wholly to reduce your taxes, then the remainder can be carried forward 5 years. But with medical expenses, it's going back 12 months, ending in the tax year. So let's say we have an example of a taxpayer whose net income is $39,444.16, and his total medical expenses, which were a lot of prescription medications and a root canal done, of course, by a certified dentist, amounted to $5,200. So the way the non-refundable tax credit works is you have to take $5,200 and subtract the lesser of 3% of your net income, or $2,834. Now, in the taxpayer's case, since he has modest income, only $39,444.16, the amount that would be deductible from the $5,200 would be $1,183.32. Higher income earners, making 100K or whatnot, would probably only have to deduct a maximum of $2,834. We can get that threshold by doing a little bit of math. So if you take $2,834 and divide it by 0.03, $94,466.67. All right, so if you take 5,200, deduct 1183, you're left with 4,016.68. Multiply that in 2025 by 14.5%. If you have any amount of tax, those medical expenses will reduce your tax by $582.42 if you live in any province in Canada other than Quebec. I think Quebec and Yukon are exceptional situations. I'm just covering Quebec here. So with Quebec, you have to take the 4,016.68 and multiply it by 12.11%, because residents of Quebec have to file a Quebec return. And as a result of that, there is a refundable abatement of the basic federal tax of 16.5%. So in this case, federally speaking, um, that same taxpayer would have their taxes reduced federally $486.42, but on the Quebec return, they would claim the same credits. And usually in tax software, you only have to enter them once. You don't have to enter them twice, once for federal and once for Quebec, unless exceptions occur. Um, and if there are exceptional circumstances, there's different placeholders for those types of specific medical expenses. So you can see there's a bit of a margin here. Um, and the important thing is that since the ultimate savings is based on your net income, if you're in a couple situation, you can obviously infer here that it's always more beneficial for the lower net income spouse to claim the entire family's medical expenses. And good quality software, if there is an allocation to be done between one spouse and the other, will do that for you automatically. So due to the mechanics of this calculation, I'm reiterating myself, but it's better to repeat yourself than to miss something. It is better if the lower net income spouse claims medical expenses for the family. For Quebec, that doesn't matter because the calculation is based on family income. So the mechanism on the Quebec return is slightly different than on the federal. And generally speaking, no matter whose medical expenses are 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 being taken into consideration, the gross amount will be reduced by a portion of the family adjusted family income. So, is any amount refundable? So, there is a refundable medical expense tax credit based on the medical expenses that you also claimed as a non-refundable tax credit. And this mechanism was put in place by the federal government or Canada Finance in a way to help offset the high cost of living for modest income taxpayers. So if you have a relatively high amount of medical expenses and a modest income, a portion of it may be refundable. And you may ask yourself, how? So you can consult the federal worksheet for line 45200 or 45,200. It used to be line 452 in the old days, but somebody felt the need to add a couple of zeros. Let's not judge. So if your net income is over $33,294, this refundable credit is gradually phased out, and that all that means is gradually you lose eligibility for a refundable tax credit. Now, the $33,294 threshold is specific to the 2025 tax year. I imagine that for future years it will be indexed upwards. And who knows, maybe eliminated, but let's not go there. So at the end of the day, we have the lower of 1504 and 25% of the sum of the disability supports deduction and eligible medical expenses after the 3% net income reduction, less 5% of income over 33,294. So using the same taxpayer as an example, if we take a look at that chart, that federal work chart, how it works is this is your adjusted net family income. The lines above this chart kind of explain what you have to add and what you subtract. This is the income threshold, 33,294. If you subtract line 7 from line 6, line 6 minus line 7, you see that this taxpayer surpassed the threshold by $6,150.16. He didn't have any disability supports deduction, but he did have the credible medical expenses to the tune of $4,016.68. Take 25% of that, you're left with $1,004 1,415. Subtract from 1,416 5% of the threshold of the amount that exceeds the threshold. You get 307.51. Subtract then line 14 from line 15, and you get 696.66. And that's how you end up with a refundable tax credit of $696. But remember, we started with $5,200. From that, we subtracted around 1,100, maybe 1,200, rounding things off. So that isn't so bad. You know, it's better than a couple of Happy Meals at McDonald's. So these are the resources that you can consult after viewing this video. You have the Canada Services website, and I'm going to put these links in the description below of my video. And that can be done where you can search. There's a place to search for medical expenses, and they can tell you how and they're claimable. Do you need a doctor's prescription? Do you need to be disabled in order to claim them? And then there's the income tax folio. And generally speaking, I recommend that everybody reads these tax folios, especially if you're a tax professional. You need to be familiar with them. They don't change them that frequently. And from year to year, there's only small nuance changes. And you can always find changes in the What's New section of the guide. Revenue Quebec also has a website where you can consult and find out what medical expenses are credible, and also how to claim them. And brochure IN 130V kind of lists all the medical expenses, generally all the medical expenses that you can claim. However, if ever you're not certain if a particular expense is claimable, and you can never be 100% sure unless you're a CPA, then consult a CPA. I'm just going to put on my video capture. So that's my 2 cents about medical expenses. I hope I made it more clear to you. And the whole concept behind can-do taxes is that if I can do it, you can do it. So be encouraged, be emboldened, but if you're uncertain, don't hesitate to consult a professional. And with that said, take care, and I hope you enjoyed this video. If you did, subscribe and tell a couple of people about the channel. And if you didn't, tell me how I can do better. Take care, everyone.